Looking at imagination, why did it lose 2/3 of its share price in one day? I don't have a fundamental answer for that question, but I can explain that there was no reason to be bullish on this, and that the sequence of waves and the composite here was setting up for a bearish move. That it came so violently and moved from basically 300 to 100 in a day, or a number of days or weeks, is a surprise, but it is not a surprise that it moved down. Just looking at the pattern on the monthly chart, I'm marking this as one sweep here, as a corrective sweep overall. And what followed was a three-wave move. I'm viewing this as not as 4 and 5, but as 3 here, 3 down, and a sequence up, which ultimately ended bearishly for a move down, which I'm looking at as C, as a corrective move, for another move higher. I will go over this in a moment. On the long-term chart, it looks like it will find a bottom somewhere in the next number of months or year or two. Who knows how long? I don't expect it to move up immediately. I think it'll be languishing down here for some number of months. But overall, it should hold eventually and move back up sometime in the future. But I want to look at this sequence here because leading up to the fall in price, just because price moves up like this does not imply that it has a future bullish slant, of course. Moving to the weekly, it is overall part of a corrective pattern. And here, in the last number of weeks before the hard tumble down, there was an ending wedge here, an ending diagonal on the new high, and that ultimately saw the vicious fall down on Monday or Tuesday of this week. Now, how you view it here, if you take it as like this for 3, or you view it like this, perhaps, it doesn't make a big deal. It's still 3 overall with an ending diagonal at the end. Probably more like this. So, why it happened? Well, I read in the news why it happened with Apple. But as for being able to predict it happening, being able to predict a bearish move as the next one, that comes from being able to read price movement and having the benefit of Elliott Wave labeling. And I found this very useful. I did not look at this until after the collapse. I've never been interested in this particular stock, but viewing it now, it completely makes sense as such. If you had asked me before, I can promise you that I would not have been bullish on this sequence. For me, this is a bearish setup. Some traders might want to view this, count this a bit differently from me. I can propose something else where this would be 1 and 2, and then 1, 2, 3, 4, 5 for 3. This is wave 4, and this is wave 5. I don't view it like that. I find that this move here is just 3 waves. You would have to set up a triangle for that to work as a wave 4. This is 3 waves here. You could probably propose a triangle for 4 and then 5, but the issue with that is that you would look for a sequence of 3 waves to follow. And for me, that's not really enough. I would look for something like this overall. But disregarding all that, the main point is that this sequence here was bearish. And what we saw in one single day was a move from about 260 to under $100, which is a vicious move down that probably will not recover for many months. So that's the benefit of being able to read a chart, that you can at least not be exposed to moves counter to what you want to happen. Okay, bye-bye.